the insurance sector, where there's a new henchman in the person of Mohammed Kari. Now, who is Mohammed Kari? Mohammed Kari is right now the Commissioner for Insurance in Nigeria. He was a former Deputy Commissioner in charge of the technical department of the Commission. He is a chartered insurance practitioner of over 35 years. He began his career at the Royal Exchange Assurance in Kano, and he was a member of the Nigerian Vision 2010 and 2020 committee. We will be looking at the tenure of the new insurance henchman, as I am being joined in the studio by the Managing Director at Pensions Alliance Limited. He is Mr. David Uduanu. Thank you, Mr. Uduanu, for coming to the program. I just want to know your thoughts about the new commissioner. Let's just go straight. I know a lot has been said about Fola Daniel, who was a former commissioner, but who is Mohammed Kari?
Well, I think Mohammed Kari is, like you said, 35 years experience. He used to manage Nikon, which was once the biggest insurance company in Nigeria, and Nigeria Reinsurance. So he's seen it all. He's been there right from the get-go, and I think that it's one of those appointments where you feel that right now we have somebody who, is reform-minded, I believe is reform-minded, and will take insurance to the next level.
What did you practitioners in the industry enjoy under Fola Daniel, just before we go into what you expect Mohammed Kari to do?
Okay, just by way of explanation, I run a pension fund, so not an insurance company, but I spent some time in the insurance sector. I think Fola Daniel will be remembered for a number of things. Primarily, one, he concluded the recapitalization exercise. Secondly, he introduced, IFRS to insurance companies, and he ensured that, the companies publish their accounts on a timely basis. He also ensured that, started the process of introducing corporate governance in companies. He focused on improving the claims experience of insurance companies, and also enforcing the no premium, no cover policy. Finally, I think there was a big push to increase penetration of insurance companies to reach the 1 trillion premium level. He didn't achieve that, but during his tenure, insurance premium doubled to about 320 billion naira, and Nigeria is now the second biggest insurance market in Africa, but albeit very far from, behind from South Africa. We'll
definitely talk about the pensions market, which you are actively involved in, but let's still stick to the insurance market. How would you gauge the performance of the market at the moment, going by what has been done before? And of course, now that Mohammed Kari is coming to step into the shoes of the former commissioner, what is he meeting on ground?
Well, I think that he meets about 50, 55 insurance companies. We think that the sector is still very fragmented. So you have 55 companies chasing 320 billion of premiums. He's going to meet, I don't think it's a very strong sector. I think there are probably maybe about 5 domestic companies and a number of foreign companies that are just coming into the market. In terms of the listed companies, most of them are trading at below the net book value. They're trading at par, meaning that investors don't have much confidence in those companies. One of the things that I think is a scramble for insurance licenses in Nigeria, you find a lot of the big companies, all the big 4 insurance companies in South Africa are now here, but they have very small businesses. So he's going to meet a sector that is characterized by some strong operators and a lot of weak operators. So I think that one of the challenges that he has to tackle with is how do you take the industry to the next level? By way of context, if you look at the banking industry, when Soludo came in 2004, he cleaned up the banking industry. And it was a big bang, recapitalization, increased the capital, and now you have about 22 banks, but 6 very big banks that can compete with any bank anywhere in Africa. Similarly, in the pension space, you have about 5 pension companies that have assets under management of close to 300 billion each, with the biggest one managing excess of $1 trillion. But at insurance, you don't see those things. The biggest insurance companies, Leadway, Custodian, they struggle to reach premium levels of 30 billion, and the asset base is less than 50 billion. So he's going to meet a sector that requires, a strong regulator, that requires, single-minded approach to ensure that we create big insurance companies. I think that, a big economy, we're the biggest economy in Africa, we need big insurance companies. There's a danger of the sector being taken over by foreign companies. Nothing wrong with foreign companies. However, to mobilize domestic savings and get insurance to the nook and cranny of the country, you need big insurance companies.
So what do you think Mohammed Kari should do in that regard? We have a fragmented insurance sector,
yes.
Based on your analysis. But what do you think you should do to strengthen the sector itself?
Okay, I think the first thing is on governance. You should focus on boards and ensuring that you have competent, credible and experienced directors on the board of companies that are independent. Secondly, I think there's this rule that prohibits or restricts non-holders of insurance charter practitioners or something from being CEOs of companies. I think it's time to scrap that. I mean, insurance companies... Isn't
that part of the regulation that
well,
to ensure that there is a standard that are being upheld?
No, there should be a standard, but it doesn't mean that if you're not a chartered insurance practitioner, you can't run an insurance company. I mean, it was in the banks about 25 years ago they had that, but they changed all of that. What you need are competent, credible CEOs who have a vision and independent boards who can take the companies forward. I don't think that you need to be a chartered insurance practitioner to be a CEO. Insurance is a business like any other business, and that is fundamental. The other thing is capacity. He needs to focus on, particularly on reinsurance. We have one reinsurance company in Nigeria, Continental. You have Nigeria Re that is moribund. So it's either they sell Nigeria Re to serious investors, or he licenses one or two other reinsurance companies. Now, the role of reinsurance is important because they help you retain, premium in country. So today, the biggest reinsurance company in Nigeria hardly writes up to 20 billion naira of insurance risk because they don't have the capacity. The other thing, which I think, controversial, arguably, we need a second round of consolidation in the insurance sector. We need to focus on how to create big insurance companies. One of the things that trigger consolidation, unfortunately, that practitioners don't like is increasing capital base. The last time it was down to 2 billion, insurance companies, it reduced from about 130 to 55. We need to increase the capital base of insurance companies. They're thinly capitalized to take on the risk in the economy. They cannot support, they don't have the right caliber of staff at the right level. They cannot mobilize retail insurance at the way they are. So I think that Mohammed Kari should take those big, bold decisions. And it's really around how do you create big insurance companies. Insurance is not a game for small players. Everywhere in the world, insurance companies are bigger than banks. They own banks. Insurance companies complement pension funds in mobilizing domestic savings. So I think for me, his big agenda, like I said, capacity and creating big companies through a second round of consolidation. It could be M&A, but I think that...
I was going to mention M&As, like we have in the banking sector. We may expect to see that some insurance companies may merge with some others. So what implication would that have? Because if you're going to merge, it could result to job loss in some instance. Of course, some people will be employed, but we could have job loss. What are the implications of such a move? Well, if it goes ahead to do that.
I think that, if you do an M&A, medium to long term, you create more jobs. And you look at the banking sector, the banks or companies that are small and fragmented cannot invest in retail infrastructure. And retail infrastructure is where you create jobs. So you see that insurance companies, they have a dying agency model. Most of the agents are old. They are not as educated and not being replaced. Insurance is not attractive for fresh school leavers to join because there is no investment in this sector. So you need M&A. I don't think M&A is necessarily going to destroy jobs. M&A will eliminate jobs at the top level. You are going to have fewer MDs and fewer EDs retiring. A lot of the MDs in insurance companies are also retiring. I mean, the average MD in an insurance company is above 50 years. So they're close to retirement. I don't think that should be a worry for them. But what it will do is that it will create big companies that can invest in the retail agency network. The retail agency network and insurance companies doesn't have much investment going on. You don't have insurance companies with, robust agency network. You need, big insurance companies. So I don't think we should worry about the job loss. The job loss will happen immediately, but very quickly, with more capital, they will employ more people. And I think that the beauty is that the pension funds have the capital to recapitalize insurance companies today. A lot of insurance companies...
We'll get back to the issue of pensions after the break. We're going to go on a short break very shortly. But before then, I wanted to still stick to insurance. You talked about some foreign companies coming into Nigeria, for instance, South Africa. In that country, I think the insurance sector is bigger than the banking sector. What do you think Mohammed Kari should do to at least close the gap in terms of where we are in Nigeria, the insurance sector, I mean, to where we should be, been able to take up very high volume of trade, like the capacity issue that I mentioned? How should he go about it?
Well, I think that the first thing to do is to reduce the number of players in the industry. The second point is, Daniel started this push towards 1 trillion. So focus on products. There are some compulsory insurance products that are in the law that are not being enforced. So you have car insurance, you have building, you have group life, you have health insurance. You should focus on those and work with insurance companies to ensure that those compulsory products are adhered to. And, you know, if you really, really go down to it, if it is in the law of the country, then it becomes an offense not to. I mean, I hear that there are about something like 50 billion of car insurance is outside the sector. That shouldn't happen. I mean, there's no reason for that. And you should go after all those stuff and close down those offices. You know, it is as simple as that. If you ensure that those car policies, that easily adds under maybe 50 billion to insurance premium. You know, so, but I think that again, you need, I mean, Mohammed Kari is a regulator. He's not going to do this work himself. He needs companies with the resources to do this work. And it's very expensive. Nigeria is an expensive market to operate in. But people pretend that you don't insurance. People always say, oh, you don't need capital to do insurance because you're reinsured. But that's not the point. The point is that every company that wants to be big and have scale needs capital to attain the scale.
Now, do you think that you would need the government to come in at this point to assist in any way?
Well, I think there used to be a problem with, you know, group life of government and government not paying on time. But I think that's been resolved. But I think it's just to put it on the front burner that where government is taking insurance policies, they should pay us at when due. You know, so because what you don't want is a regulator who is moving on one front and government dragging it back. And I'm talking about all layers of government. Now, on the enforcement levels, you need local government and you need state government because car insurance is sold at various levels, so car licensing offices and all of that. So he needs, obviously, the support of the government. But I think that by the president appointing Mohammed Kari the day after or immediately the commissioner retired, it shows, you know, that he's really serious about the insurance agenda. And I think all credit to him, you know, for making that appointment. I know people are waiting for ministers, but he's made the first appointment. And I think that it shows that government is serious. And when you have a serious government like the president we have now, I think it's time to revigorate the insurance sector.
So it all boils down to experience, credibility, and of course exposure of Mohammed Kari.